Trade war fears have contributed to a flat start on the ASX. Business reporter Chris Kohler joins us now live. And Chris, how are the markets looking this morning?
Morning to you, Annalise, and to Kieran. Yes, look, not a particularly flash start to the week, down 0.4% as I speak to you. As you mentioned, the trade wars continuing to affect share markets around the world negatively. Now, Donald Trump most recently said that the upcoming trade talks that are scheduled to take place with China may not go ahead. So that sent yet another shiver through global markets, and Australia is now moving lower as a result of that. Now, down 0.4%, as I said, 6,557 points. Now, the likes of BHP, Rio Tinto and Telstra are dragging on the index. But, of course, it is the middle now of earnings season, and we've had a couple of wins this morning from companies. JB Hi-Fi has announced that that its net profit went up 7.1%, which is much better than the market expected. It is one of the most heavily shorted stocks on the ASX 200, and as a result of this morning's news, the share price jumped over 8%. So certainly not what people were expecting from a retailer in what we know is a very, very tough retail environment in Australia, particularly for the bricks and mortar. There's a couple of other things that are going on this morning. Nine Entertainment has announced that it plans to mop up the rest of Macquarie Media, the 45.5% that it doesn't already own. It put forward a $1.46, I should say, per share offer, which values Macquarie Media at $275 million. Now, Nine would be paying $114 million or thereabouts. It has been recommended that shareholders take this offer from an independent board that was assembled by Macquarie. So it looks like it's going to go ahead. Obviously, there's a fair few checks and balances that need to be made, and shareholders will need to give the approval on that. But that's certainly the big news of the morning.
And when it comes to the discussion around interest rates, it's a new era for Australia, but we're talking about interest rate cuts. And those comments from the RBA Governor on Friday, Phil Lowe, have continued on with analysis this week about whether there will be any kind of quantitative easing, potentially printing of more money into the economy, for those who don't know the term. But what are your thoughts on where the discussion around the interest rate cuts are heading?
Well, it's certainly growing louder, Annalise. It's a big deal right now because, as you know, we're at 1% for the cash rate after back-to-back cuts in June and July. Now, economists out there are expecting that really the RBA is only just getting started, and there will be another cut by the end of the year and probably another one early next year. So that would take us to 0.5%. Of course, never before seen lows, but also the area where further interest rate cuts might not have the desired effect on the economy. The banks might not be able to pass them on to shareholders. And so you do have to start having these conversations around quantitative easing or other forms of emergency monetary policy. You know, Westpac has pointed to the experience in the Bank of England where the banks over there can take a certain amount of loans from the central bank there. So all of these sorts of things are now getting talked about because it's a global easing of monetary policy now, and Australia is certainly not immune. We are very low right now. In fact, just last week we saw the RBNZ double cut interest rates, and that sent the Australian dollar spiralling. So look, this is certainly a global and regional issue, and Philip Lowe last week brought up the topic as well.
Double cuts. There's another option I hadn't heard of. Thank you, Chris Kohler. That's one to watch.
Thanks, Annalise.